U.S. Oil and Gas Extraction Industry Forecast, 2026-2030. Overview. The U.S. oil and gas industry will continue evolving through 2030, shaped by energy transition policies, technological innovation, global demand, and market volatility. While fossil fuels remain a critical part of the energy mix, companies will face increasing pressure to operate efficiently, reduce emissions, and integrate cleaner solutions. Opportunities will favor firms that combine traditional extraction with sustainable innovation and digital transformation. Year-by-year outlook 2026. Market growth, plus 3.2%. Key factors: stabilization of oil prices, 80-85 barrel, focus on shale productivity. Opportunities: expansion of low-cost domestic drilling, especially in Texas, New Mexico, and North Dakota. Smart move: invest in enhanced recovery technologies and methane detection systems, 2027. Market growth, plus 2.9%. Trends: increased regulatory oversight and stricter environmental standards. Outlook: companies investing in carbon capture, emissions reporting, and ESG compliance gain. Competitive edge business. Tip: build partnerships with ESG auditors and clean tech vendors. 2028. Market growth, plus 3.5%. Shift: rising demand from global markets, Asia, Africa, due to geopolitical reshuffling. Profit potential: LNG exports, offshore exploration in the Gulf of Mexico. Strategic move: join U.S. export infrastructure expansion, terminals, pipelines, storage. 2029. Market growth, plus 3.8%. Tech focus: AI and automation in drilling and maintenance reduce downtime and costs. Opportunity: offer AI-driven monitoring, predictive maintenance, and remote operations services. Business model: launch a tech-focused oilfield services firm or software platform for energy data analytics 2030. Market growth, plus 4.0%. Outlook: traditional extraction remains strong, but diversification into hydrogen and carbon storage is critical. Big play: transition into hybrid energy companies offering oil, gas, and low-carbon solutions. Smart strategy: develop business units in carbon capture, utilization and storage, CCUS, and blue hydrogen, most profitable areas in oil and gas, 2026-2030. Enhanced oil recovery, EOR, CO2 injection, polymer flooding, and advanced fracking for aging wells. Liquefied natural gas, LNG, high demand for U.S. LNG exports in Europe and Asia. Carbon capture and storage, CCS, CCUS. Federal incentives and ESG pressures make this an attractive add-on service. Digital oilfield services, AI, IoT sensors, and real-time analytics for upstream optimization, onshore shale development, continued development in the Permian Basin and Bakken Formation, hydrogen development, blue hydrogen, leverage existing gas infrastructure to enter the clean hydrogen economy, decommissioning and environmental remediation, high-margin services for aging fields and regulatory compliance. How to build a strong oil and gas business, 2026-2030. Invest in low-cost, high-yield fields. Focus on Permian Basin, Eagle Ford, and Gulf of Mexico with high-return projects. Incorporate sustainability practices, monitor emissions, minimize flaring, and meet new methane regulations. Digital transformation: use real-time data platforms, remote drilling automation, and AI-based decision-making. Partner with tech and ESG firms. Create hybrid offerings: energy, plus environmental compliance, plus analytics. Diversify into adjacent markets. Offer CCUS, hydrogen production, or remediation services to balance fossil fuel risk. Access government incentives. Tap into federal tax credits for CCUS, methane reduction, and clean energy R&D. Where to find jobs in oil and gas, 2026-2030. Top job roles: petroleum engineers, drilling supervisors, automation and controls technicians, environmental compliance officers, data scientists, energy sector, geologists, geophysicists, AI/ML engineers, for predictive maintenance. Best locations: Texas, Houston, Midland, New Mexico, North Dakota, Oklahoma Gulf Coast, Louisiana, Mississippi, Alaska, North Slope. Growing employers: Chevron, ExxonMobil, ConocoPhillips, Schlumberger, Halliburton, as well as smaller E&P firms and oilfield tech startups. Job platforms: RigZone, Oil and Gas Job Search, Energy Jobline, LinkedIn, Indeed. Final thoughts: between 2026 and 2030, the U.S. oil and gas extraction market will remain profitable, especially for businesses that can balance fossil fuel productivity with digital innovation and environmental responsibility. Whether you're in upstream exploration, midstream logistics, or oilfield services, flexibility, efficiency, and regulatory agility will define long-term success.